Welcome, everybody. Today we've got Justin England from 5V Capital. Welcome, Justin.
Thank you for having me.
Pleasure. You've spent a lot of your career investing and helping build some incredible businesses. Can you take us back to where it all started and what got you into private equity and what was interesting about it?
It started around the dinner table. I think we grew up in a family that was sort of always interested in business, and I had a dad who was in the food industry for a long period of time, and we always used to talk about investing in different food businesses. And then the formative part of my career was at KPMG. We were kind of always advising companies, largely family-run businesses, and I sort of got sick of just doing the advisory part. It was sort of a real want from my perspective to kind of put my money into businesses and really sit with those businesses past the advice. And so, yeah, I jumped into private equity. It was a chance to kind of not only look at businesses, but put your capital into those businesses alongside other investors' money and kind of go on the journey with them.
For those people who are not aware, what are the key things you're looking at when you're looking to acquire a business?
So there are a bunch of really obvious things and then some more intangible judgment-based elements, right? So I think the sort of obvious things are, is the market good? Is the market an attractive one? I think if we can pass that gate, then, as a private equity business and backer of private companies, we're then looking at that market. So, first tick market, second tick scale and growth. And is it a private company? So can we invest in it? And sort of those things are obvious, right? You have to be attracted to the market. You have to think that the company and growth story are attractive. But then if I think about the more judgment-based elements, it's things like quality of team. Can you partner with the team at the heart of the organization? That might be a founder, it might be a CEO, it might be a whole management team, but that's a really judgment-based call. You've got to kind of find that the fit is right with the people. Once you've kind of got comfortable with the people in our minds, the next thing is, can you align on a growth plan? Can you sit around a table and align on a growth plan? So, do you have a common goal and understanding of where you want the company to be in 1, 3, and 5 years? And that's really fundamental.
If there was a founder watching this video that was considering bringing a partner in, be it private equity or kind of any investor, what sort of advice would you give them in order to be more attractive?
My starting point is always it has to be genuine. We've really moved past the days of sort of, marketing a business or a private equity fund sort of notionally marketing themselves to achieve success. I think founders in particular are really good at seeing through marketing. And I think investors are the same. And so, my answer to your question is fundamentally it's got to be genuine fit. So as a founder, I would not be shy in kind of communicating what that means from your perspective. What are your values? How do you see your business? Where do you want to take it? And ultimately, a good partner is going to see that and sort of understand it. And for the investment to work, that's got to be a really tight fit. So if I was advising a founder, it's sort of like I've kind of shared this with a lot of the founders we partner with, is the authenticity of the partnership is the most important thing. So don't get swayed by advisors or how you think you should market the business. I think ultimately you have to be yourself
Yeah.
and you have to determine if the person sitting across the table is a good partner for you.
So once you've done the deal and signed the business, what's then happening in that period of time ahead of you taking the keys on the business?
So the answer to your question sort of starts before signing. And before signing, as you can imagine, we are doing a lot of operational due diligence alongside other types of due diligence, right? Financial, legal, tax, commercial. It's quite a long menu of things to get through. But one of the most important things is an aligned growth plan with the partner. And so that growth plan, it doesn't only govern kind of what you do when you've signed and are waiting to take, an investment position in the business. It really does govern your actions along every step of the process. So,
Yep.
the worst thing for us is we sign a deal and then everyone kind of is confused about what they're doing before the investment actually formalizes. And so we actually talk that through.
Yep.
And so in many cases, you'll have a growth plan with your partner that there is a plan between when you've signed and the deal completing. So things like getting a head start on talent. We don't want to sort of have the deal complete and not have made a head start on sort of obvious things in that growth plan. And talent can be one of those things. Have you identified people in the team that sort of need support or roles that won't make it? It's important to get a head start. And often
Yep.
people miss that period between signing and completion. But it all goes back to that aligned growth plan. You don't only want to talk about kind of what the business looks like in year 5. You've got to really do the tactical work
Yep.
along every stage of that timeline.
And there's a lot of conversation around the first 100 days in a business, whether that's as an investor, as a board member, as an executive.
Yeah.
Um, what's important in the first 100 days for you as an investor?
I think there's two part of first 100 days. The first part I kind of think about as table stakes and sort of like, do you have quality financial information? Is reporting set up right? Have you done the work on, we have a growth plan, the team might not be right, and we need to make some changes. These are sort of really elemental table stakes things that you've got to have in place, as a growth investor. And so 100 days is often, sort of orientated around those things,
Yeah.
board reporting and governance and hygiene, right? But the other thing in 100 days is I think what we want to avoid, and I think it's true for lots of growth investors, right, is you don't want the first 100 days just to be hygiene because you want to create growth and momentum in that first 100 days or 6 months, whatever you choose. And so often it's a forgotten part of the 100 days, but you've got to start making strides in your growth plan. And so, when I get asked this question, it's like a lot of people spend time on governance and reporting and think about it as hygiene, and that has to happen. But equally, you can't drop the ball on growth. And so for me, it's always those two buckets.
It's kind of continuation from before you sign the deal to when you sign the deal to when you get the keys to the first 100 days.
Absolutely.
No
And
shit.
you sort of hit the nail on the head. It's sort of, you don't want momentum to stall at any part of the process.
Yep.
We talk a lot about fast starts. And fast start is not just getting a nice board report in place. It's sort of, it has to be more than that.
And as you've touched on boards, when you obviously take a position, you become a board member in some of these businesses that you're working with as well. What does your role on the board look like, and what are you typically kind of doing as a board member from an investor perspective?
At the heart of a private equity growth investor should be good governance. It should be, good structure, but that should not pull away from the fact that you are there to help the business grow. And so your role on the board, in my eyes, should mostly be focused on how you're growing the company. Um, what we do is we kind of summarize growth in what we call a value creation plan. And that will have specific roles and responsibilities, not just for board members, but for management team members. And so you've got a combined goal. Everyone knows what they're doing. And particularly for the board,
Yeah.
you will actually have stuff you're in charge of.
Yeah.
And so, when you ask the question, what's your role on the board? There's sort of a holistic answer, which is to provide strategic input, to provide a lot of thought and challenge on the growth plan. But also, we as board members, and 5V board members would be no different, would have KPIs on the board. So, I'll give you an example with one of the businesses we're involved in. It's a cancer care manufacturer. My role on that board has been working with the CEO to open up Asia. And so, at a board level, I'm there, month on month, but more tactically, we have a weekly cadence around what is our Asian expansion plan and progress. And so it's quite involved.
Yeah.
And we sort of feel like if our management team has KPIs, the board members need them too.
So, over the years of hiring executives to lead these businesses, what have you learned about the people that have really succeeded and, I guess, been successful as leaders in those businesses versus potentially ones that just look great on paper?
So one is um, capability. So, you need someone in an executive role with capability, and sort of that is generated through experience. It might be operational experience, but it also might be industry experience. And so you need to make an assessment of capability. The other area that's incredibly important is leadership. And the way I think about leadership in a lot of the businesses we're partnered with is the ability of someone to galvanize people around a common objective. And so that is your team, but it's also, in this instance with private equity, it's your board. And that can be quite tricky. You've got a founder, you might have an institutional shareholder as a private equity fund. The levels of involvement differ. And so leadership is often kind of galvanizing all stakeholders in a business around a common goal. I think the interesting part of leadership in private equity is those stakeholders then explode to outside of just the business itself. I mentioned the investor stakeholder, but you might have a new banking partner in the mix. You might have investors that are based offshore that you need to engage with. You might have target acquisitions that you need to nurture and bring to the table. It's sort of obvious that an executive needs to be a leader, but I think very specifically for private equity, it's your ability to kind of galvanize people around a common objective.
Yeah.
I think the third point, which is incredibly important, is work ethic. Work ethic in private equity is not just the cadence to kind of work through things. It's the ability to roll up your sleeves and dive into a fix or a growth when you need to. And so when I'm assessing these leaders, I'm always looking for the capability, the ability to kind of be very backable and galvanize people around an objective, but then the work ethic. Is this person actually going to roll up their sleeves? And
Yeah.
and sort of that's my model. And I would also say to you, there's no one model to fit all. I think everyone would have a different answer to this question, but sort of that's the way I've approached it.
Having been in the private equity space for some time now, how have you seen the industry evolve over that period of time? And has the approach to value creation within the portfolio or assets you invest in changed at all during that time?
Yeah, I think it's sort of the statement is it's net positive evolution. I think there's sort of always challenges in any industry, but if I think about the private equity industry, there's been a lot of innovation in terms of how you support the investee companies or partners that you've kind of engaged with.
Sure.
And I think that's been born out of two areas. I think one area is just proactive and innovative thinking in terms of how you create returns. But the other piece is, I think ultimately, globally, private capital has had a lot of flows of money into it, right? And that's meant that there's been more entrants.
Yeah.
And so I think there's a lot of white space in private equity. It's still a really underpenetrated industry. You can set up a fund and you can have a really kind of uncompeted opportunity set in front of you. You really have to innovate in order to show your value add to your partner company. And so, sort of the main innovation I've seen over the years is private equity firms are no longer just investors who kind of sit on boards and ask really good questions. Private equity investors have to help you diagnose your operational capability. So, is your sales team up to scratch? What are you doing in your supply chain? Can we improve that? That ability to diagnose operating quality has been an innovation in the last 10 years, and not just with sort of consultants or investment bankers moonlighting as operational people, with actual operating experts who've been in businesses. I think the other innovation I've seen a lot in private equity is through this operating focus, and that's sort of diagnosing operations to determine levers we can collectively pull to drive growth or value, is the formation of a value creation team or portfolio value creation team in most modern funds. And I think what I've seen is most modern funds will have an ability to actively contribute to operations during the investment period. Um, it can mean helping management teams form solutions around what they're dealing with. So in the supply chain example, we're able to provide advice, but it can go so far as, and we haven't taken this step as a firm, but it can go so far as to an operating person sitting in the private equity fund that then parachutes into the business,
Yep.
which a lot of funds employ that strategy. So I'd say, if you ask me for the kind of the net summary is there's been a lot of positive innovation, and I think all for the betterment of how we create value and returns. The main theme has been this operating value.
Yep.
Um, and it's sort of not a surprise, right? In a world where money was free and sort of interest rates were structurally very low, um, the emphasis on real operating value creation was less. And sort of as we've come out of that cycle, the need to really focus on value creation, has been there,
Yep.
and you've had this reaction. But I think it's a positive reaction. I think,
Yep.
ultimately everyone benefits from that focus.
Yeah, that makes sense. I think there's been a lot of themes. I think people talking about managing assets being way more important than it ever was, because I think there's a lot of capital around, as everyone knows, and I think a lot of potential partners. I think it comes back to that relationship piece you were talking about as well, and building that connection with someone. Because if it's competitive and you ultimately price might not be as good as people want, I think the ability to manage it so well throughout the period that you have an ownership stake in the business obviously becomes more and more important to get a good outcome for your investors. And following on from that, looking forward, what's your view on the private equity market for 2026 and beyond?
So it's really multi-speed, I would say. I think it really depends where you sit in the private equity market. We sit in this size range, which is 5 mil of profits to 25 mil of profits, or if you like, let's say $100 million of value to sub $500 million of value. And in that range, I think, and 5V would be no different to other investors in that range, the environment is very positive. The prevailing tailwind in that environment is this generational transfer of wealth, which everyone talks about, right?
Yeah.
Year in, year out, there are these largely boomer owned businesses that are coming to market looking for a partner for a variety of reasons. And that might be succession, it might be de risking, it might be a growth plan that they've struggled to execute. So I'd say the sort of the deal making environment in that size range, which is 100 million to 500 million, has been really active this year, and I would suspect that a lot of investors like 5V expect it to be active in the years to come. I think the multi-speed kind of comes out of, at the venture end, you've had, a lack of exits, cash back to investors has been an issue, and then at the very large end, it's more than $1 billion in value type transactions. These are really hard to put together. You kind of need all sides of the market firing, and the stock of these assets to go after is actually really limited. And so it's a challenging deal making environment in that part of the world. But I'd say, if you're thinking about privately owned, founder led, family run, mature businesses, the
Yeah.
outlook is really positive. The only other thing I'd mention in that is um, it's really sector based. And so some sectors are really suffering, direct to consumer, property related, like these sectors have cyclicality. And so you've kind of got to be measured in making investments there.
Yep.
And there are experts in those sectors, right? But I think at the moment they probably have a few headwinds. Um, but if you look at other sectors, cybersecurity, outsourced business to business services, these sectors have a lot of growth, structural tailwind. And so I think the outlook is really positive. So you need to be really careful, I think, with size
Yep.
and with the sectors you're entering.
And during your time in private equity, how have you seen the approach to capital strategy change?
I think it's been quite a good innovation in market that you've seen these platforms evolve, right? So, not just a mid-market private equity fund or a turnaround investor or a debt investor or a VC investor. You've actually seen the evolution, and I think 5E is a good example of that, which is a platform approach to investing. And so, fundamentally, why do we exist? Is we exist, primarily, and we want this to happen, is if you've got an exciting, growing business, it doesn't matter how big or small that is, we want you to talk to us first. And so, for us to enable that, we need different pools of capital to invest in those businesses. So, right at the lower end, we back founders with software ideas and we might be investing $5 million at that stage, and that sits in our venture capital fund. If I move to the other bookend, which is our private equity fund, we might engage with a $15 million EBITDA software business that's existed for 20 years. And we might be investing over $100 million in that business. And so I think we've liked the innovation in market that platforms have risen. We hope to be an example of that. But ultimately, I think that helps business owners because, you can, if you feel like you've got a value fit with an investor, you can kind of be serviced by that investor over a long period of time.
So, finally, if you could go back and give your younger self some advice about private equity and the journey ahead, what would you go back and tell young Justin?
It's a great question. I think for me, in my journey thus far, and I'm still learning a lot, like I think we all have a lot to learn kind of going forward. I think the main thing has been the ability of myself to scale by people. And so I think, when you start your career, you're kind of head down, your view might be a bit myopic, it's sort of, I need to be the best modeler, or I need to be the best presenter, or I need to know the answer to this thing. But inevitably, what's helped me a lot is scaling through extremely high quality people. And so, if I think about that advice, it's sort of spend your time thinking about how to scale by building a team around you. I think it's sort of if you can get a capable person into your team, that is game changing. It's sort of, I think about our origination team or our value creation team, the people that sort of run those teams are amazing and invariably they help me to scale. And it's the same with our partner portfolio companies. I sort of, at the beginning of my career, I might have thought, hey, you need to be able to be the one to pick up that this sales team is sort of underperforming. But now I rely on, people in my network with much better experience in sales than me to come in and give me that view. Not only do I get a better response and probably better evaluation, there's sort of more credibility with that person and the partner across the table, but also they can work across 10 portfolio companies, and I would be stuck on one. And so I probably like think a lot more about how to scale yourself with people
Yeah.
than necessarily trying to be, an expert in one area. I think it's been a bit of a reflection for me.
Thanks so much for your time, Justin. Really appreciate it.
My pleasure.
Nice to see you.
Thank you.